Welcome back to the Trading Desk on COTV Channel 11. Nicole, again, volatility is back in the markets. We talked about this last show, and it's continuing here into the June months. As we get into summer trading, July and August tend to really slow down as we get into the summer months, just because traders go to the Hamptons.
Oh, right. You got to have your vacation.
They go on vacation. So markets really go from a Monday to Friday, really to Tuesday to Thursday is what I always tell people. The trading gets real slow on Mondays and Fridays. People don't really come back to their desks. Desks are minimized. There aren't as many people trading for the banks, so it's just a lot less volume and a lot less activity.
Well, you got to trade to live, not live to trade, right?
Exactly. Yeah, absolutely. That's why we do this, so we can take the summers off. One thing that we wanted to talk about today on the education front is we wanted to talk a little bit about the futures markets. People always ask me, what is a future? Isn't that scary? My brokers always told me, stay away from the futures, stay away from options, stay away from commodities.
And what's the easiest way you would define a future?
Well, a future is basically it's a contract that allows me to buy a bundle of, whether it's a commodity, it could be wheat, could be corn, could be hogs, and it could be financial indices such as the S&P 500. So it allows me to go out and buy a contract out in time on a vehicle based on a physical commodity, or an index.
And it's been around for thousands of years, at least the concept of it.
The concept, again, we talked about this in our last show. Trading has been out there for a long time. As humans, we're conditioned to trade with each other. I've got something that you want, and vice versa.
And in general, it's in regards to commodities, which could be,
again,
wheat,
hard
potatoes,
goods,
anything.
Something that we're consuming, something that we're eating. But it did get extended. Let's talk a little bit about the history, because I think the first futures exchange was started in Japan.
Right. Well, yes, one of the first exchange was the rice,
right,
in regards to the samurai,
right,
who were getting paid in rice, but they needed something that could easily be converted to money.
To coin. So they wanted to convert the rice to, again, the coin commodity, or the coin, the currency, so that they didn't have to convert the rice automatically. So they created an exchange in Japan in the 1730s that really allowed.
Well, and going back even farther, Aristotle talked about Thales or Thales, how we decided to pronounce that.
Yeah.
And he basically had decided that he was going to go and talk to olive press owners before the actual olive harvest came along. And he paid them beforehand to say, hey, I want your olive presses when the time comes, regardless of the harvest.
Which works out for a lot of, it works out, again, farmers have always hedged, and there's really two types of traders when it comes to futures markets. You've got hedgers, and those people typically own or grow the physical commodity. So you've got, wheat farmers, corn farmers, oat farmers, soy farmers, the meats and grains that are always involved. You've got gold futures, you've got silver futures. All these things are traded on a physical market, but it really enables the producer to hedge their crop, maybe get a price today for what they think it could be worth later.
So it's almost a type of insurance.
It is,
regardless of what it's going to be.
For the grower. But then you have the speculative side of the market, which is somebody that goes in and bets that, hey, I think the price is going to go up or down. So you have really, those are the two main components that make up markets. And there's a number of things. I want to point out to people, the beauty about futures markets is there's a time component on the contract, and then there's a nominal fee. So those are things that you need to be aware of on every contract. So there's a time when they expire, and you can either take ownership of the crop or sell it outright before you had to take the ownership and roll it to the next contract.
Ideally, you don't want to take ownership.
Well, if you're a speculator, you probably don't. But if you already own, say, the wheat, you may want to sell it at that current price. So you're just locking it down and say, I'm going to sell it at $4 a bushel. So it really depends on which side of the market that you stand on when it comes to futures. One thing I want to say is if you want to get into trading futures, probably, especially financial futures, let's say the S&P 500, is probably the most liquid market out there in the world.
So easily convertible to cash.
Easily convertible, and it rolls over every quarter. It's basically March, June, September, and December are the contracts. So every 3 months, those roll over to a new contract, and you just need to roll forward. So we just rolled forward to the September contract. So currently the front month is considered the September contract. The next contract will start the third week in September, and that will be the December contract.
So you got to keep an eye on when certain things are coming to an end, or perhaps starting.
Exactly.
In order to know where your money's actually.
And also to know that you're not going to convert to the physical. So you don't want to
get
delivered.
Have a load of potatoes at your door.
Exactly,
right?
or gold. You don't, unless you
well,
want.
Take a load.
unless you want to own the gold. So it really depends on where you are in that cycle. But I do want to say that the liquidity that the futures markets offer is probably the best, along with Forex markets, in the entire trading world. So I want to make that point if we don't get anything else across in this segment, that liquidity is paramount, and probably futures are more liquid than stocks when it comes to trading.
Well, thank you for all that insight and demystifying some of that, Matt. When we come back, we'll be talking about your money and how you can kind of get involved with some of this stuff.